Hey, welcome. You can think of a business's trial balance as its first, most basic financial health check. It's kind of like when a doctor takes your pulse, but for a company's books. It's that first step to see if, on paper, everything adds up. All right, let's get into it. So, let's say you're the business owner. You get this report back, and hey, the two main columns match perfectly, down to the last cent. You'd probably breathe a huge sigh of relief, right? But what if I told you that a perfect balance can actually be a mask, hiding some pretty serious problems underneath? So, what exactly is a trial balance? Well, at its core, it's super simple. It's just a list. It pulls all the debit balances from the general ledger into one column and all the credit balances into another. And because of the magic of double entry bookkeeping, if everything was done right, those two columns should total up to the exact same number. And here's what one looks like in the wild. You've got your accounts on the left: cash, capital, sales, expenses, the usual suspects. And look at the bottom line. The debit column adds up to 1,252,632. And the credit column? Yep, exactly the same. On the surface, this looks fantastic. This is what you want to see. This is where things get really interesting, though. That perfectly balanced sheet, it can give you a totally false sense of security. Because while the math might be right, the actual story that these numbers are telling could be a work of fiction. So let's put on our detective hats for a minute. We're going to dive into the kinds of errors that are, well, masters of disguise. These are the ones that slip right past the trial balance without making a single ripple. And that's really the key here. Some mistakes are, believe it or not, perfectly balanced. They respect the rules of double entry, a debit for every credit, but the entries themselves are just plain wrong, hiding in plain sight from this initial checkup. Okay, first on our list of suspects is the error of omission. This is literally when a whole transaction just gets forgotten, vanishes, poof. Let's say you made a cash sale for $100,000, but oops, no one ever wrote it down. Since both the debit to cash and the credit to sales were missed, the totals are completely unaffected. It's like a ghost transaction. The books have no idea it ever even happened. Now this one, the error of principle, is really sneaky. So the company buys a brand new vehicle. That's a long-term asset, right? But somehow it gets recorded as just another daily running expense. The debit amount, $950,000, is correct, and it was posted as a debit, so the books balance. But the damage is huge. By calling an asset an expense, you're getting a completely warped picture of the company's financial health. And then you've got the error of commission. This is a classic mix-up. Your customer, B. Abby, sends in a payment. Great. The money is recorded correctly, but it accidentally gets credited to the account of a totally different customer, B. Abu. The company's overall books still balance perfectly, but now you've got a real mess. B. Abu earns a credit they didn't earn, and B. Abby is probably going to get an angry reminder notice. All right, so we've looked at all the sneaky, hidden errors. Now, let's talk about what happens when things aren't so subtle, when the balance is obviously broken. This is when the financial alarm bells start ringing, loud and clear. Whoa, now that's a different story, isn't it? Look at those totals. The debit column and the credit column do not match, not even close. See, unlike those hidden culprits we just talked about, this is a huge flashing sign that says, hey, something is arithmetically wrong here and you need to go find it now. And honestly, the cause is usually something pretty simple. A basic typo when adding things up, accidentally putting a debit number in the credit column, or maybe someone just got distracted and only posted half of a transaction. These are the kinds of classic slip-ups that can throw the whole system out of whack. So what do you do when this happens? You can't just leave the books a mess. Well, accountants have this really clever little tool called a suspense account. It's basically a temporary placeholder. They stick the difference in there to make the books balance for now, which lets them get on with preparing reports while they start the real detective work of hunting down that original error. And that brings us to the final, and maybe most important part, cracking the case. This is how accountants actually track down these mistakes, whether they're the sneaky, hidden ones or the glaringly obvious ones, and finally, make things right. It's a very methodical hunt. You start with the obvious. Just re-add everything. Seriously, you'd be surprised how often that's the problem. Then you go through and make sure all the debits are on the left and all the credits are on the right. Here's a cool pro tip. You check for transposed numbers. If the difference in your totals is divisible by 9, there's a good chance someone wrote 98 when they meant 89. It's all about systematically checking off the possibilities until you find your culprit. And once the error is found, it gets fixed with a formal journal entry. This correction is what officially sets the record straight. It clears out that temporary suspense account, it just vanishes, and what's left behind are books that aren't just balanced, but are actually accurate.
So after all that detective work, what's the big takeaway here? Why do we even bother with this whole process? Let's tie it all together.
Look, the trial balance is an absolutely vital tool. It's your first line of defense against mathematical mistakes. It helps you catch a whole class of errors, and it gives you a quick, at-a-glance summary that you need to build your real financial statements, like the income statement and balance sheet. But remember, it's an indispensable but imperfect tool. I think this quote really nails the single most important lesson of all this. Just because it's balanced doesn't mean it's right. It's a simple sentence, but it's the core truth. The real job isn't just to make the numbers add up, it's to make sure those numbers are telling the true story. And that really leaves us with the one question you should always be asking. It's not just, do the debits equal the credits? It's about digging deeper and making absolutely sure that the financial story your business is telling the world is the true one. Thanks for watching.